I would like to thank Mr. Amr for this interesting presentation and for presenting the challenges we are facing in implementing this international system regarding PEPs and taxation in general. Now, I would like to move to Dr. Ahmed Shawki and ask him as a practitioner on real ground, where do we stand when it comes to this international standard of a system? What is the Egyptian taxation authority capacities when it comes to this issue? The floor is yours, sir. If we look at the importance of profit shifting and the value of profit shifting in line with the international standards, it is more than $300 million, and this has resulted in tax evasion. But I really don't like to use the word tax evasion or tax dodging or tax avoidance, because one can lead to fines and the other can lead to imprisonment. So let me say tax avoidance, just like Ireland, to fine or to impose fines on people, and developing countries suffered losses of $220 billion because of tax avoidance. Egypt lost 200 or 300 billion dollars last year, and this could improve the situation of the public budget. In real terms, the most significant challenge when it comes to transfer pricing and tax avoidance is the IP, or intellectual property. Just because the panelist said it's not tangible, it's very intangible. I cannot measure this. I cannot hold people accountable for this. And this is a very difficulty when it comes to tax avoidance or at arm's length price. And I need to train people in the tax authority. I need to train accountants and auditors to understand this and to be able to tackle this. The handbooks and the executive regulation to be issued by the Egyptian tax authority will help, but I think people are not ready to tackle transfer pricing at this moment. We need a study and we need cooperation between the Egyptian tax authority, accountants who will apply this, clients who will be subject to this new rules of transfer pricing. This is very important and should be taken into consideration, should be given due attention in order to coordinate and cooperate with the Egyptian tax of authority, taxpayers. And also the point of change at the international arena was raised after 5 or 6 years. I think we will have what I might call integrated tax policy, because all the countries will tackle the challenge just like the US did. They dropped the tax to 21% in order to avoid the base erosion. All the countries should do so through a multilateral agreement. We should also care for these bank secrecy rules in order to have sustainability and a complete system covering all the countries. The issue will not be about incentives. Here I'm not referring to tax rate, because international investors will not find moving to a certain country more beneficial, because all the countries will be applying the same system. Especially developing countries would also improve or raise the awareness to deal with this, because my goal is that 5 years later we will not suffer any incident of tax evasion, tax dodging, or tax avoidance because of the cooperation among countries in this regard. Thank you so much, Dr. Ahmed, for this. Dr. Abla, I have some questions for you. The center has played a major role in tackling similar issues. You referred to a book in the subject. I'm really eager to know what are the center plans when it comes to taxation, whether internationally or domestically. Thank you so much, Dr. Ahmed. Allow me to comment briefly before answering your questions, and I will start with thanking Dr. Amr for the picture. I did not know that the pharaohs started the taxation system long time ago. I did not know that. Thank you for adding to my information in this regard. I want to answer the question. Here, I want to start with the digital economy, which is a very serious issue. It's the new buzzword now, but no one dares to delve into the details. We all refer to digital economy, but no one is detailing the steps of this transformation to be done in the right way. Here we have a big plan on digital economy. Some of you know we hold or we will hold workshops over the coming 6 months to cover all the dimensions of the digital economy, how we do so, what is the model, where are the gaps, the shortcomings. And of course, we will cover fintech among other things. I have specific points to refer to taxing services related to digital economy should be taken into consideration. We have a research paper done by Dr. Mustafa Abdel, and the problem of lack of taxation, not only for digitized activities but for services in general, especially in Egypt. Here I'm still referring to agriculture and industrial and commercial services. We shouldn't tackle these activities separately. We should tackle services as a whole. And let me tell you that many of the service sector is informal. So this is a very serious challenge. I have a question to Dr. Pascal here, if I may, and Dr. Amr as well. If we want to be able to bridge the gap between the domestic laws and international standards in this regard, or international taxation, how can we do so in light of the poor performance of the tax authority? It's very weak authority. The authority is not digitized. People are not well trained. So how can this poor institution reform this? Can I do this in isolation of the rest? The second question, bank secrecy rules. Of course, it's very good to disclose the information of the state, but in the same vein we have a very weak tax system, arbitrary assessments, stub pattern tax inspectors. So the procedure is good, but the timing is a bit problematic in light of the current situation. Also, Pascal, you mentioned that the tax rate increase is good because the state can generate money later. It's good, but if I apply this to the Egyptian context, increasing the tax rate is not a problem per se or in it, and of itself. If we know where this money goes, and if this is directed to the taxpayers community or to the business community, but this is very limited. So I'm just exerting some pressure on the community in a very hard way. and they should recover some money from expert support programs, but they don't. So the thing is that they don't have enough cash. The tax base should be bigger. Some groups do not pay tax at all, and we cannot reach these people. So before increasing the tax rate, we should increase or expand the tax base. Also a question for Pascal here. You refer to the US, and the US is becoming the star here, or in everything, not only in this regard. They are against multilateralism in general, but at the same time on taxation, the US wants to get its taxes from everywhere. We need to benefit from the OECD, the US stands. I want to know more details. I want to know about specifics that we should work on as developing countries. Also, among the pillars you focus on is that the multinational companies can shift profits to zero taxation countries. So the request to get this money and preserve the right of the country should be issued from a country. So for example, Egypt can ask multinational companies operating in Egypt trying to shifting the profits to stop that. Is Egypt ready to do so, or the rules should be dedicated from abroad? And I'm not an expert. You're all experts in taxation. I'm not an expert. I just studied before coming to this session. Thank you so much.
And thank you very much. And you asked very difficult questions. So, and using the tax terminology, I'm physically existent in Egypt, so I'll be here anytime to answer the question. But will you see the opportunity that we have Pascal with us to answer all the questions? So.
Thank you. I'm happy to have a permanent establishment in Egypt and come more often. So let's be clear. Thanks a lot for your comments and questions. The first one is about tax administration. It's clear, and I suppose the IMF would fully back what I'm going to say. Tax policy and tax administration go together. And some even say that tax administration is tax policy. So reinforcing the capacities of the tax administration, doing the right trainings, doing the right level of people is absolutely key for a proper implementation. So you're absolutely right. Now, it's also a catch-22 situation. You cannot wait for the tax administration to be fully operational before changing the tax policy, but it has to go together. And as relates to bank secrecy, because you made the link between the performance of the tax administration and the access to bank information by the tax administration, this is part of our standard. You cannot have access to exchange of information if you are not in a position to protect, for instance, the confidentiality of the information. The information is to be used for tax purposes. It's not to be leaked. It's not to be put somewhere where everyone would have access to it. It's for the tax administration. And that's something which is reviewed. We do review of the compliance of countries with the standards. And part of the review includes exchange of protection of the confidentiality. And if someday you want to move to automatic exchange of information, today you have committed to exchange of information on request. And you need to implement, and you cannot do it because you have strict bank secrecy rules. So you really need to change it for the sake of Egypt, again. But if you do this, you will need to strengthen the tax administration. But if you are at some point to move to automatic exchange of information, you would need to undergo a review on confidentiality first and to comply before getting the information. So that's a way as a safeguard for taxpayers. The second thing, maybe confused in translation, but I didn't mean to increase tax rates. We, as stubborn, narrow-minded tax people, that's how we are designed, we usually like broad-based, low rates, so I will never advocate for high rates. What I was trying to say is the revenue GDP ratio is too low. 14% is much too low, and that will not allow you to fund the development. Now, how do you move? I would fully agree with you, Dr. Abla, which is you need to broaden the base and not necessarily increase the rates. And broadening the base, personal income tax, the end of bank secrecy for non-residents clearly will have an impact. I didn't mention figures earlier, but the end of bank secrecy in the world has already yielded 100 billion euros to around 20 countries. I'm French. The French tax administrations collected 8 billion euros out of people who had bank accounts in Switzerland and elsewhere. So there is definitely big money to collect here for individuals. And it's also a question of tax justice. You can then explain why, again, the people with low income still subject to personal income tax, why they pay fully on their income, and the rich ones don't because they can hide. So that's something which could help. But on corporate income tax, what's at stake is broadening the base domestically in terms of provisions or depreciation and all the incentives that you may have, better to close them down. In exchange for lowering the rate or just making sure that it's properly collected. But internationally, and that's something which is inevitable, you cannot fix your domestic system if you have an international leakage. And that's where the BEPS measures are a way to stop the bleeding, to make sure that you keep in Egypt the profits which belong to Egypt. And that's a way to increase the ratio tax on GDP without necessarily increasing the taxes or the tax rates. Your last remarks probably the most important in terms of what's next on digital. And here, and I think Amr also raised the question. We need, I think, collectively to understand that highly digitalized business models, Google, Facebook, Uber, and the likes, have clearly put the system under huge pressure because they can do business in a country without being physically present, and they attract a lot of attention. And this results in two main issues, one on VAT and one on corporate income tax, and they are very different. On VAT, the report we did in the context of the BEPS project and that we delivered in October 15 proposes a solution which has already been endorsed and implemented by more than 100 countries. And Egypt is to come there, which is to say, if you have a service provider, Google, Facebook, Uber, or a seller, Amazon, who do business in your country, the first thing to fix is VAT. Because otherwise, it's extremely unfair competition with local retailers, with local providers, with local service providers. You're losing big in terms of VAT not collected, but you're losing even more so because you are harming your own business, which is at a competitive disadvantage. So collecting VAT on e-services, on e-sales, I would say should be the priority, and it's easy to do. We have rules, we have guidelines, we have more than 100 countries which have implemented these guidelines. It's something which can be done quickly. You have issues of administration, but we now have solutions there. And enough developing countries having implemented this to have a good benchmark. So that's the big priority. It's not, when you talk to the general public in Europe or elsewhere, the thing they have in mind, and they should, and we have delivered. The European Union has collected, I think now, 5 billion euros out of that. So big money at stake. The second issue is corporate income tax. How do you tax companies? And there, let's be careful not to be trapped into too simplified approach. We can say, oh, we cannot tax Google, they're not physically present, that's what we need to do. Oh yeah, right, but the real issue, and you pointed to that very smartly, is services. The whole economy is turning into a service economy. And what the US is saying after the tax reform, which I find fascinating coming from the US, so surprising, so counterintuitive, is, guys, you want to tax Google, you're right, but that's not the point. The point is to tax all the companies. Starbucks is not digital. But the deficiency of the current international system, the US says, is that the residual profit, the big chunk of profit of companies go to where the intangible property is. You mentioned intangible property. That's where you have the big chunk of profit. And intangible property can be easily moved. It can be put in Ireland, in Singapore, and elsewhere. And if you put all the residual profit where the intangible property is, you put the tax where the IP, where the intangible is. And therefore, you are triggered to shift your IP and your intangible into a tax haven. With BEPS, we tried to address that, but still, if you now put substance in Singapore and Ireland, they have the right to tax, and the market jurisdiction has nothing, 2 or 3%, when you have more than 100 million consumers. So the US now is saying, this system is broken, we need to fix it. The pressure is coming from the digitalization, but let's not just look at Google, let's look at all the companies, and let's give a percentage of the residual profit, of the big chunk of profit, to the market jurisdiction through a key, through an arbitrary key of allocation of profit, a residual profit allocation, which will depart from the current rules which provide that all the profit should go to where the intangible property is through transfer pricing and the Amsterdam principle. So to make it short, the US tax reform has resulted in a fundamental change of the US position, which is to give more rights to tax to the market jurisdictions. Not that the US cares that much about developing countries, right? But because they are a trade deficit country and it's their interest. But their interest aligns with the interest of emerging economies and developing countries. And that's where we have a unique window of opportunity, and those which may have more to lose are the ones which have opened the debate, the Europeans, by saying, we want to tax Google. And during the Obama administration, they were told, no way, never. And now the Trump administration takes them by surprise, say, yeah, you're right, let's do it, but broadly. And that relates to the economy turning into a service economy. So we are just in the midst of this. We spent 2018 discussing with the US and trying to digest the US tax reform. We're in 2019. We issued a policy note at the end of January, which reflects the view of 129 countries, which have all agreed to seek a consensus-based solution by the end of 2020. And what we will do in May and then report to the G20 in June is a program of work to explore this new approach. And there are many technical questions which I spare to you today, but many questions, but an appetite and a political dynamic, because again, when you have an objective alliance between the US, China, India, South Africa, Brazil, Argentina, and a number of European countries, plus all developing countries, something will happen, and it's very exciting.
Thank you very much. Dr. Ahmed has a comment that he wishes to share with us.
مشكلة سعر الضريبة في مصر.
The problem of who is imposing the tax and the taxation, the percentage of taxation is now 32%. This is on the contrary to on how we started in 2005. I am against increasing the tax rate. I am with broadening the tax base, and I try to introduce the informal economy in this base. Now, as if I'm not attracting the investors, as if I am sending them away, as if I'm not having proper ways to attract the investors. I don't want to talk about the formal and the informal economy, because I think that this will be the subject of the coming session, but the rate of tax is high in Egypt, and and the people now, they are trying to avoid the tax, and exactly the same that happened in the United Kingdom of Britain. Now, in Egypt, when we try to decrease the tax rate, the people who paid the taxes increased, and that was an initiative adopted by Dr. Ghali. The GDP increased because the people said it is not worth it. Now, again, the tax rate is about 32.5%. People are thinking how to avoid the tax. We have to be very serious because the impact will be very serious. Even the foreign investor will start thinking about the zero base and the shifting the profit. So, sorry. So I hope that this will be an issue to review the tax rate, to decrease and not to increase. Now, time-wise, I would like to give the opportunity for the floor, for the comments, Mrs. May, and then we open give the opportunity to the floor if they would like to ask any questions. First of all, I would like to thank ECES, Dr. Abla, Dr. Amr El-Munayr. I totally agree with Dr. Abla that the human resource is considered to be the backbone for the success of any institution or any system, and to put tax regulation or tax laws is not the only indicators. What's more important is to have a vision, is to have a plan concerning the revenues, but the human resource is considered to be one of the most important pillars for the success of any system. I would like to say to the OECD, we started working with them on a program, as Mr. Pascal referred, which is the Tax Inspector Without Border program. In this program, we trained the cadres in the Egyptian Tax Authority on the transpricing in the international taxation, and this program proved to be a successful program in this field, and we are still working on this program in addition to the domestic resource mobilization with the cooperation with the EU, that they put a plan for 2.5 years to train the cadres in the Egyptian Tax Authority. So the OECD, it's an honor to cooperate with the center and with the Egyptian Tax Authority, and to make sure that that training the cadres will be capable of inspecting the companies according to the international and the global standards. Thank you very much, Mrs. Yasmin. First of all, I would like ECES for organizing such a forum. Quickly, as Mr. Amri referred in his presentation, in October 2010, the Ministry of Finance issued the transpricing. We had 2 points. The first part is updating the requirements of the transpricing. Then we were doing a kind of alignment with the regulator number 13 of implementing the BEPS. The other part is we issued an introduction for the advanced transpricing agreement with all its advantages that is very well known globally, to follow the guideline that was issued in October 2018. We are working now on a guideline or a practical manual to prepare a report for country-to-country report, and this is one of the reports that is required as part of the documentation to the Egyptian Tax Authority annually. What is the main objective of this manual? It's a kind of a consultation process conducted under the supervision of the Ministry of the Finance, and they actually They give us a practical implementation and practical experience in order to implement the PAPs in the country by country report. This manual will, as if it will put practical steps how to prepare the report, how to submit this report to the Egyptian tax authority, how to write their commands, how they are going to calculate the total revenue for the multinational companies, and there are certain and specific companies that they are required to submit such a report according to the condition that were set in the guideline. We are going to do a kind of consultation and a kind of survey on the guideline, and we welcome all the comments and the questions from all the stakeholders and from the professors, because this input is very important for us. Mr. Abdullah, and then Mr. Kim.
Thank you so much for giving me this chance. My name is Abdullah Al-Adli, and I am the former head of tax department in Mustafa Shawki office, and I was a colleague of Mr. Amr in these two companies I worked for, and I can say that I'm one of the people who wrote on international tax systems, and I'm very happy of the level of discussions and the depths of topics discussed today. But unfortunately, and I'm sorry to say yes, it's a very enriching discussion. We have a good law, but as if we are driving a Rolls car or a fancy car, but the driver is a tuk-tuk driver. I'm sorry to say so. The application on real ground by the tax authority is poor. I work on tax files, and I'm sorry to tell you that now here, for example, we talk about digital economy, e-payments. All the payments sent to abroad cannot be taxed accordingly. Or here, when I speak about the transfer pricing, we have a team, a very good team, but tax inspectors, so when it comes to related parties, they cannot deal with it in the right way. I'm very worried about that, because tax payers or multinational companies will suffer a lot, because we will not be able to apply this, maybe due to lack of understanding or lack of capabilities to apply. I would like to thank all the panelists for their enriching comments and presentation. My name is Engineer Adel Riz. I am a communication engineer, so I'm not an expert here, just like me. Yes, we're not experts in this regard. But when it comes to technology, I know a bit. You know, IoT is the new buzzword, Internet of Things. When we knew about IoT, no, it's now IOE, Internet of Everything. So everything will be internet or will be connected. Banks might be closed in the near future. Even the cards we use now to get some money from the ATMs will not be used that much. You just need to come close to the cashier and then identify the amount. You can just give an order through your mobile phone and then you pay. Even the plastic card will not be used that much now or soon enough. So I'm not speaking personally or I'm not bragging, but I introduced the ATM here in Egypt with Bank Misr, and I also done a lot on the digitization of banks. And when SWIFT wanted to assign a code to the country, it should be sent to the Central Bank of Egypt, but they sent it to Bank Misr because the Central Bank of Egypt did not have computers back then. So Internet of Things should be really taken into consideration. and this will affect on everything, on our nature, on style, on our behaviors. So when I go to the shops, they are always empty. People don't go to shop anymore. When I was living abroad as well, my son gave me a magazine and he asked me, do you like this shirt or pullover? And I said yes. And then an hour later, he will get me the pullover. And I told him, no, I don't like it. He said, it's easy, it's okay. I got it from Amazon and we can send it back if you don't like it. And Amazon tax this. So you get the price including the VAT. Amazon sells and buys everything in the US. We used to have JCPenney in the US, and they said, no, it's closed now, it's no longer there. Even in the US, people don't go shopping in the real shops because the internet is the main platform for everything, not only shopping. Do you have a question? No, just a comment to make. And I want you to take IoT into consideration because this will digitize everything when it comes to money.
Thank you. A question for Pascal. I think Amr knows what I'm going to ask because you really touched on something that is close to many of us. You said that for the digital economy, VAT is the easiest thing to start with for services, cross-border services. You make it sound so easy, whereas in fact it is not that easy. And we have in Egypt since 2016 been going around in circles in dealing with B2C, applying reverse charge in Egypt. It's not applicable, it's not working. Can you tell us about experiences of success on B2C, on e-commerce, VAT specifically, somewhere similar to Egypt?
Oh yes. I mean, many countries. The most recent may be Argentina, where we advised them on the tax reform. Is Argentina similar to Egypt? Yeah, I would think so. I'm in Chile on Monday, talking to the finance minister, Felipe Larraín, precisely on that. So Chile is likely to implement it. We're discussing this. Colombia, I think, is in discussion with us. And I have a team, my VAT team, which is currently in Melbourne for a global forum on VAT. This week, literally, when we speak. And they have 120 countries, I think, attending the global forum on that precisely to do the benchmark. So the team, which is in Melbourne today, will be in Egypt, I think, early April or mid-April to engage with the Minister of Finance and see how we can do. So I'm not saying it's easy. In tax, nothing is easy because when you get into the nitty-gritty details of implementation, you always have complexity. But fundamentally, if you look at the policy direction, it's easy. Until 2015, it was unclear where VAT was to be paid. There was no rule. So the seller in good faith could think that it's in the country of residence of the seller. US, no VAT collected. Or you could say it's in the country of destination, but you don't know what's the mechanism to collect it. Or best, it's, well, nowhere, so there is no VAT. Or in some cases, there is double taxation. We clarified the policy to say that on B2C, I'm talking about B2C, tax, the VAT, is to be collected in the country of destination. We have 100 pages of guidelines there. So we have a very detailed standard. I will send you the standard immediately after the meeting if you're interested, but we have very detailed guidelines, including on the modalities of collection. So that's something where we're clear. It's, of course, in the nitty-gritty details more complicated, but it is being implemented. You can draw example from the European Union and the directives that they've passed. You have benchmark. It's not terra incognita. It's not uncharted territories, which would be difficult. And that's why the team is coming, and we'll be very happy to share what other countries are doing on this precise issue. And in addition to the tax on e-services, you also have the link with custom on low-value goods. And there, it's probably not comparable to Egypt, but Australia is a good example. They had an exemption until 1,000 Australian dollars of low-value good, and they were losing massively. They have reduced this. I don't have the new threshold, but pretty low, and they are yielding a lot of revenue. So it's really worth the investment of the tax policy change and the training of the tax administration, because again, what's at risk is not only the revenue lost, but also the problem of competition with local retailers.
I would like to briefly comment. This is a bit off topic because digital economy is not the main thing here. But yes, I said VAT is the easiest. And with Dr. Abla, we are conducting a research paper on digital economy, all the types of digital economy and implications for tax policy legislations. And with the cooperation with the OECD and IMF, we can issue a paper, and we can also include the Ministry of Finance and the Egyptian Tax Authority. We can study everything and come up with recommendation. I think in August or since August or September, Dr. Abla is organizing a series of workshops on digital economy, and we can expand this further. Second, also, when it comes to bank secrecy rules, I want to refer to a few things. We agree that not all tax inspectors will have access to all bank accounts. Of course, we would have a group of officials responsible or allowed to exchange and share information. Not everyone will have access to this. Also, we have an example before, FATCA. Here, the banks gave some information to the US tax authority based on an international agreement. So the money laundering unit in the CBE in Egypt has access to all the information. So we will not remove bank secrecy rules, of course, but we can have some flexibility in dealing with this, because we do not want any negative implications on the image of Egypt or on banks themselves. Just like Mr. Abdullah say, it's a catch-22 situation. It's a dilemma. I need to give people trainings, and you will find people progressing on transfer pricing. There are many trainings, many agreements, but this will not happen overnight. We should expect mistakes and failures, but we shouldn't be pessimistic about anything. Also, we have a problem in the ministry or the authority, or Egypt, let me say in Egypt. People, when after you train people get offers, so they leave, and you lose this investment. That's why we need to have solutions that go beyond the training.
Mr. Osama Tawakkul, the advisor of the minister, I think that after this comment, we are going to close the session, because actually we are behind. Thank you very much for your kind invitation. Thank you very much of this precious information. I have a comment on what Dr. Abla said on how the performance of the Egyptian authority tax is very weak. Actually, the Egyptian authority tax is the leader nowadays, and there are kind of improvement and updating on the different departments of the Egyptian tax authority. Mr. Abdullah is commenting on the international tax and on the groups that they were trained and the trans-pricing. Actually, I was a former employee at the Egyptian authority tax, and I was supervising, and I was working as a supervisor, and I had all the files talking about the trans-pricing before. Actually, the people that they deal with us, they had no information. They know nothing about the trans-pricing. when we issued the guideline and the manual, they were very happy about this. They have the information and they don't want to provide this kind of information. They can see that the authority has no information at all, and they didn't want to give us information. So now the groups that took the training, yes, they got proposals from other offices because of their efficiency, because they are and now I have 15 employees that they applied for resignation because they got proposals from other private offices. And now I have employees that they are employed now in private accountant offices, or they traveled to the Gulf countries. No, on the contrary, I see that we are improving, and the files that has been inspected lately, actually, it was a kind of an added revenue for the state. And on the other side, in some of the files that we were inspecting, we found that this man deserved to get his money back. So we did so. Unfortunately, I will wrap up the session and I will close the session because we are running out of time. Before I close the session, I would like to thank the speakers and the panelists because it was a very rich session. I benefit at all. I benefit a lot from this session, and I might work in the field soon. Thank you very much.